In this video, traders, we are going to look at, should I stop trading once I hit my profit target for the day? Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so this was a comment actually on one of the videos that I did from Lee, who said, should I stop trading when I hit a daily profit target, even if I feel there's more opportunities? Appreciate your comment and question, Lee. This is a really great question actually, because this is something that comes up very, very often, and there's different kinds of schools of thought. And we've had this discussion. We've talked a little bit about, should you press more? Should you back off the throttle? How should you deal with this? And it's very personal. You have to basically, before you kind of decide what to do, step back and look and see how you generally behave. Because if you generally get really frustrated when you give back profits, so let's say you're up on the day and you give back profits, if that really annoys you, you have to play that slightly differently from if you give back profits and you shrug your shoulders and go, hey, it doesn't matter too much. And also you have to see how the knock-on effect is for the next day. If you're up, let's say you're up $1,000 on the day and you've given back 500, if the next day you're always trying to get that 500 back early, end up giving back and digging a big hole for yourself, then you need to play a little bit more defensively. If you're the type of person who's up 1,000, ends the day minus 500, doesn't affect you, carries on the next day as 1,000, then you need to think of it slightly differently as well. So always put your personality and the way you behave and respond to things into your decision-making process, because what's right for one person, is often not right for another. So that's worth thinking about as well. But this is my kind of thoughts on it. At the end of the day, if you're in tune, and you're trading and it's working well, and the market is good and you're having a good day, then keep trading, keep pressing. I don't think stopping is a good idea, because guys, the market is very cyclical in its nature. And this is the same kind of throughout days, throughout years, throughout quarters. It goes in times when it's a very, very good market to trade for years at a time, then maybe it goes quiet. Same, you might have a couple of months at a time, and it goes down as well into lower time frames. You might have a couple of days where it's very, very good to trade and your strategy's working, you're in tune with things, it's great, and then times when it's not. And I'm a big advocate of pressing things when it's working for you. Now, again, there is a mindset thing to think about here, and a discipline aspect, an emotional aspect to consider. But if we assume we've considered that now, then I think if you have an edge and it's working for you, to keep pressing that edge. Don't back off just because you've hit your $1,000 target, your $200 target, your 20 grand target, whatever your target is for the day. It doesn't make sense to back off from that if the opportunities are still there. And so doing things like setting a max trailing stop. So a max trailing stop on your loss. So let's say that activates just like you're in a trade. As soon as you get to $1,000 profit on the day, you say to yourself, I'm not going to give back more than 250. So I'm always going to end up the day. So as soon as I've hit 1,000, the worst case scenario is I end up 750 on the day, for example. Whatever that number might be for you, it doesn't matter the number, but at least you're protecting it. So you're not going to give back everything. Because what you don't want to do is have a great morning session, and then you come into the afternoon session, you think you're going to press, and then you press and you give back all the gains. That's just devastating. That's just a frustrating, annoying, loads of different reasons why you don't want to do that. And conditions can change. You might perceive there to be more opportunity, but conditions can change, and you might just be getting stopped out and you don't want to be trading on tilt. So set a max trailing stop that's the maximum drawdown you're prepared to take from your equity highs once you've hit that during the day, and using that $1,000 example from earlier. So number 3, guys, is set a max number of losers. So another thing to do, and I would use this in addition to the max trailing stop, is to say, okay, once I've hit my so-called profit target for the day, again, let's use that $1,000 example, I've hit my grand for the day, and now I'm going to allow myself 2 losers or a maximum drawdown of X. So maximum drawdown $300, whatever we'd said, or a max of 2 losers. Now, obviously, it depends on the risk you're taking per trade and all the other variables that go into that, but then it stops you from, it's kind of a little bit of protection against you just thinking you're trading well, and actually you just out of tune. The market conditions have changed, it's not quite the same. So again, we are protecting the gains, but still giving ourselves the opportunity for upside. So really, we're kind of considering it like a trade. We've got a stop loss on our trade in terms of number of losers, in terms of drawdown from equity highs, but we still have a bit of upside potential if we hit the throttle right and we're pressing well. That one can turn into 2 to 3 to 5. We don't want to stifle that productivity, or that productivity is not the right word, but the edge that we've got and the opportunity just by capping off at 1,000, but at the same time we don't want to give all the gains back. So that's a really good strategy to use, I think. The other thing is, do you want to reduce size or increase size? This comes back to the initial point at the beginning of the video, guys, which is how do you respond to things? If you're very, very sensitive to drawdown from equity highs, it's one of the things you're working on as a trader, which is fine. You know, we're all trying to work on one thing at a time. It's something that you know, we talked about many times before on the channel, working on one specific thing. If you are working on that, then you might want to, once you've hit that, let's use that $1,000 again as an example, that $1,000 mark on the day, you might say, you know what, I'm going to dial back the size a little bit. I'm going to be a little bit more careful because I want to have that confidence. I need to bank confidence. And let's just digress very slightly. That's not a bad strategy as well. You know, if you feel like you're lacking confidence, if you've had a rough quarter, rough month, rough couple of weeks, whatever it is, and you need to build the confidence back up, then by all means, close on the day and go, you know what, I've had a great morning, it's fantastic, I'm going to bank that next morning. You know, it's not always about maximizing gains, guys. Sometimes it's about building confidence up so that you can kind of feel a bit more of a foundation moving on to the next month, So, you know, it's not always just an objective looking through the lens of P&L, but going back to the lens of P&L, reduced size might be the right thing to do because it might give you, you might feel that once you're up a certain amount, you start trading a little bit more aggressively, you start being a little bit more blasé with your orders. So that might be a thing. The other option is to increase size. You know, I'm a big advocate for this. If you think you're in tune, you're prepared to press the throttle down and you're prepared to give back a little bit more, then why not increase the size? As long as you're managing the risk, as long as you're keeping the position size sensible, you're not just suddenly swinging, there's nothing wrong with then saying, okay, things are working well, the afternoon's setting up great for this specific trade, I'm up $1,000 on the day, I'm prepared to give back half of it on one trade, for example, when normally maybe I only want to give back 250, I'm prepared to give back 500, setting up the trade that I like, I'm going to double my position size and pressing it accordingly. But then, you know, understanding that the risk is there with that. But that's a potential opportunity and potential decision for you to make. And the final thing, guys, just slightly off topic, is just watch out for the next day. So if you are up 1,000 and you give some back, just watch the next day. You don't come into the next day carrying that baggage over, saying, okay, I need to get myself back to that 1,000 mark. Or let's say you stop and you do 1,000, it's put another grand on the board, you finish the day up 2. Don't go into the next day thinking, I've got 2 to play with, I've had a great day yesterday. 2 little things you've got to be careful of when you're going into the next day after some kind of event day beforehand, whether that's a drawdown from highs, whether that's a doubling of profit, or whatever it may be. So just being mindful of that. Anyway, those are my thoughts on it, guys. I'm sure I'll stop trading once I hit my profit target for the day. Appreciate your question, Lee. See you next one. Take care, guys. Bye-bye.